Equity, debt, commodity, where to invest, how much to invest, what should be the asset allocation. These are the questions that come up for each and every person when planning their investments. Within mutual funds itself, there are so many mutual funds in the market that one can get confused. We at FinChikitsak make things simple. Hello friends, myself Akshat Gupta. I am the co-founder of FinChikitsak with 15 years of work experience in multinational banks like Citi, American Express and Credit Suisse. I am on the journey to reach out to at least 1 lakh families and help them to achieve their financial freedom. Today we are going to discuss at length what are mutual funds, how many type of mutual funds are there, and how should one go about selecting the right mutual fund. Did you know there are more than 4,000 mutual funds today? For making things simple, mutual funds have been further segregated into 6 categories. First, equity mutual funds. Equity mutual funds predominantly invest in the stock markets. There are 22 subcategories within the equity mutual funds. This includes large cap, mid cap, multi cap, small caps, and many more. What are large cap mutual funds? Companies with top 100 market capitalization are large cap stocks. 101 to 250 are called mid caps, while 251 onwards are all small caps. That is how the companies are identified between large, mid and small. Now large cap mutual funds invest predominantly in the large cap stocks, while a mid cap, as you can imagine, would invest in a mid cap stocks, while a small cap mutual fund in small caps. There is also something called as a multi-cap mutual fund, in which the fund manager is required to invest 25% each in large, mid and small cap, with the balance 25% at his or her discretion. Conversely, there are flexi cap funds. Now, in a flexi cap fund, the fund manager takes a decision based on his or her view upon where to invest. Typically, over the last 6 to 7 years, we have seen that the top 10 flexi cap funds predominantly invest about 60 to 70% in the large cap stocks, while the remaining 30 to 35% in the small and mid cap stocks. There are many more equity mutual funds on which we'll be providing our videos later. Now coming to debt mutual funds. What are debt mutual funds? Debt mutual funds invest in government securities or bonds issued by AAA, AA or A-rated companies and also banks. Why have debt mutual funds been created? One has to understand that so many categories of mutual fund exist for a purpose. For a person who is looking for capital preservation, debt mutual funds is the way to go for. Debt mutual funds ensure that your capital is safe while at the same time you are earning some kind of return. Within debt mutual funds also there are many subcategories like long duration, low duration, medium duration, gilt funds, credit risk funds and many more. What is duration? Duration means what is the expected tenure of the bond, the expected tenure of cash flows basically that the bond will give over a period of time. Now based on your investment hypotheses, you need to decide which category of debt fund is good for you. Mind you, it's not necessary that your capital will be safe in a debt mutual fund if you are investing in a one credit risk fund, two corporate bond fund or medium or long duration funds. For example, if the interest rate rises, the yield on the mutual funds also increase, but that leads to decrease in the prices of the bonds. And when that happens, your debt mutual fund will also experience a loss. So think about where to invest in debt when you are thinking about long-term capital preservation. Let's come to the third category called hybrid mutual funds. Now, hybrid mutual funds allows you to invest in a combination of debt, equity, commodities as well as other assets like gold. For example, a hybrid aggressive fund would probably invest more than 65% in equities and 35% in debt. These type of funds provide you with a conservative approach towards investments. Then there are solution-oriented funds. Solution-oriented funds are of two types: retirement plans and children education plans. These funds typically have a login and are meant for longer-term goal creation. Finally, there is the other category that includes fund of funds and commodities. Fund of fund is a very interesting concept wherein there is a mutual fund which further invests in the other mutual funds that are there in the market. Personally, if you ask me, I'm not a very big fan of fund of funds. Why? For two reasons. One is the taxation in a fund of fund is that of a debt fund. Secondly, if a goal plan of a person is clear, one should either go in for an equity, debt, hybrid or a solution oriented fund rather than trying to go for a fund of fund. We will have many such videos going forward in which we'll go into individual fund categories into more and more detail. For that, please do like, follow and subscribe to our channel FinChikitsak, and please do comment in the section below if you have any questions.